Oil prices dropped as investors remained cautious, I beg your pardon, about dwindling fuel demand in China. That's the world's biggest oil importer. And that's because of COVID-19 restrictions. Brent crude futures fell $1.48 to $103.84 a barrel, while U.S. West Texas Intermediate crude futures slipped $1.39 to $100.63 a barrel. Both contracts settled over 30 cents higher in the previous session due to ongoing concerns about worldwide supply and another drawdown in U.S. distillate and gasoline stocks. The U.S. Energy Information Administration says that crude stocks rose by just 692,000 barrels last week. That's short of expectations, while distillate inventories, which include diesel and jet fuel, fell to their lowest since May 2008. China's capital, Beijing, closed some public spaces and stepped up checks at others today, as most of the city's 22 million residents embarked on more COVID-19 mass testing aimed at averting a Shanghai-like lockdown. Analysts also point out that a slowdown in global growth due to higher commodity prices and escalation in the Russia-Ukraine conflict could further exacerbate worries on oil demand. Well, to drill down on this and other issues in the commodity space, we have Longi Dafoe, analyst with a financial derivatives company. Hello, Longi. Good to see you. Second time for the week.
Yes. Yeah.
So oil prices dropped, and it seems like it's being driven more by what's going on in Asia, China, Shanghai, Beijing, the COVID-19 pandemic, more than what's going on in Ukraine at this time.
Yeah, exactly. So demand concerns are king right now. So the market is really worried about what's happening in China. As you've already said, China is in fact the world's largest importer of oil. And when oil needs go down in China, it tends to affect the whole global market. So that's exactly what we are seeing, even more than what's happening in Russia, Ukraine for the moment. Yeah.
So a combination of these forces kind of balances it out, I think, because with the scenario in Ukraine, Russia and Ukraine, what we see is a spike in prices because it affects supply. But with what is going on in Asia now, we see a reduction in demand. So that kind of balances... It
balances it out, exactly. Oil is still trading above $100 per barrel, which is insane. And like you said, it's balancing it out. What's happening in Russia, Ukraine, and oil prices, we've seen Russia make some significant moves. There are worries that Russia might decide to say that all its oil payments, all its oil exports now will be in rubles. So that might also move markets a certain way, depending on how that plays out.
Yes, and European countries, the EU, they're also talking about, cutting off from Russian oil, gas. I think they say some buyers have started paying in rubles. Have you had any details?
Yes, some, I believe, about four
buyers,
also have started paying in rubles.
But we don't know who they are. I'm trying to get the name of those people, and I learned 10 of them, have already set up the ruble account, which is one of the requirements by Gazprom.
Yeah, exactly. We saw yesterday Russia banned Bulgaria and Poland from receiving gas exports from Gazprom until they decide to pay in rubles. And this is really affecting the market. We see Russia making moves in order to sort of punish countries that are against its invasion of Ukraine.
Using it as a weapon.
Yeah, a weapon, exactly.
Gas has now become another weapon.
Yeah, it is, in fact, Russia's biggest economic weapon to be played, and Russia has decided to play it. And this is, of course, moving the market. It is affecting sentiments in both the gas and oil, because the market now believes that, if Russia is doing this in the gas market, they are more than likely going to repeat it in the oil markets as well. Yes.
Yeah, but I mean, Russia also needs the revenue. If they're funding the war, there's also need for money.
Yes, they do need the revenue, exactly. They do need the revenue. And they
get about $880 million from European countries every day. That's a lot of money.
It is a lot of money, indeed. And it's not just money, it's also in terms of strategy and positioning itself for a better move in what's going on in Ukraine. Poland, the reason why Poland might have been chosen, despite the fact that other European countries have come out against it, is that Poland has some sort of strategic value. So Poland is more towards the east, and a lot of Ukrainians have moved into Poland. So it has some sort of a strategic relevance as well. Poland has also been one of the largest critics against Russia's invasion.
Yeah, exactly. I know they have millions of Ukrainians who fled from Ukraine. They ended up in Poland and they have jobs. They made life comfortable. So I guess with this cutting off of the gas, it might also affect the level of aid that Poland can give.
Can give to Ukraine, exactly. Poland, because of Poland's strategic positioning, it has been sort of the gateway through which aid has flowed from Western nations into Ukraine. And now we can see Russia really trying to flex its muscles and put a stop to this.
Yeah, because I was wondering, why did Russia not go for Germany, go for, all those other countries that have very high buys.
Gas is still flowing to Germany, it's still flowing to...
Especially Germany. Germany just sent some weapons to Ukraine.
To Ukraine, exactly.
I think early this week.
They did. So like we said, I do believe it is a combination of a strategic positioning and, of course, trying to push up the value of the ruble. That is what we believe.
Exactly, because the ruble gained yesterday. The ruble gained... I think it closed at about 97.7.
Yeah.
It went down to as low as 300 to $1 at the peak of it.
It did.
I think Russia is they are engaging some very profitable strategies there. Well, other than that, well, I think this is also related to U.S. hit the highest in 2 years.
Yes, the dollar.
Yeah. What drove that?
It's a combination of different things. 3 key things: Russia, Ukraine, the uncertainty surrounding that. We do know that the dollar, the greenback, is a very good safe haven for investors. So when we tend to see uncertainty in the markets, buyers and investors typically run towards the dollar as a safe haven. It's also a combination of interest rates, monetary policy tightening. We know the Fed has signaled that they are going to be more aggressive in trying to curtail inflationary pressure. And this is, of course, causing the yields to go up and causing the value of the dollar to appreciate. So those are the main key things now that are currently driving the upward surge in the dollar. And it's also having negative effects on commodities. It's having negative effects on oil. This was one of the reasons why oil actually went down, because the value of the dollar went up. So what typically happens is when the greenback appreciates in value, dollar price commodities become more expensive for holders of other currencies. So your Naira, your Yuan, your euro or whatever would now buy you less dollar than it typically would, which of course buy you less commodities.
I don't know if you heard that Kenya, they were supposed to do a euro bond of $1 billion, and they had to put it off.
They shelved it because of global yields, appreciating global yields, and of course, I do believe if Nigeria, I believe last month, also raised about 1.25 billion in the euro bonds market. And if you notice, I believe we got it for about 8% or so. So this was about 2 percentage points higher than a similar deal raised 6 months ago. So you can really see that prices are going up.
So that's part of the reason why Kenya put off theirs, because it was becoming too expensive.
Yeah, I do believe so. Now they're trying to pivot more towards concessional loans. So maybe loans from the IMF, from the World Bank, just to try and mitigate the amount of debt service costs that they might need to pay.
I wish we could do that sometimes, because our debt service is becoming worrisome also. But if Russia succeeds, now we see that 4 buyers have already conceded, 10 more have already set up ruble accounts. Do you see it affecting the value or the dominance of dollar?
Yeah, it will definitely affect the dominance of dollar in the global commodities
because
market.
Dollar was used to pay about, I think, 36 or 39 or so % of gas payment to Russia. So if ruble takes that place, how will it affect the dollar?
It will affect the dollar, because the dollar has been king for a very long time in terms of international oil and gas payments. So now that we see Russia trying to force a move towards the ruble, Russia is the largest supplier of gas into the EU. So yeah, it will definitely move the market. It should definitely affect the value of the dollar going forward, at least in the near term.
And back here in Nigeria, let's go to the commodities space now. Cross River and Abia begin harvest of cocoa. This should be good for us.
Yeah, it is good, but unfortunately, it is coming a bit late. So this is the mid-crop harvest season. So it should have started earlier in March, but then it was delayed due to rainfall. So earlier rainfalls, which started in January, didn't continue on, and so this sort of it sort of halted things. So now that we see rainfall starting to pick up now, the harvests are now starting to begin. And
so we're going to export this and export them in raw form as usual.
Unfortunately. I do believe Nigeria is only able to capture, most African countries are only able to capture about 30% of the value chain in terms of cocoa exports. And this is very, amounts to a lot of lost potential revenue, because we're only tapping into 30% of the value that we could potentially be tapping into. So yes.
So Longi, let's have a deal. Let's go and have a manufacturing company in Cross River State, and then we will turn this cocoa to chocolate
and sell it.
And then we can sell to
that is a very good business opportunity. Actually,
but the reality is that there's so many hurdles on the road.
Yeah. So I think it draws back to maybe the government trying to make the business environment more conducive, providing adequate infrastructure, providing the adequate amounts of aid that could allow anybody, you, me, anybody on the streets could wake up one day and say, okay, I want to set up a chocolate manufacturing company in Cross River or Abia State, and would be able to do it and tap into a huge amount of value. Yeah.
Or you can just do chocolate bread. I'm sure Nigerians will buy that.
Yes, definitely. I'm sure.
Because we have the market.
We have the market for it. Exactly.
So what else is happening in the oil space? Are we over the Indonesia's crop protectionism? You know, Indonesia stopped exporting palm oil. Are we over that? Are we still in that?
We are very much still in it, and things are looking bleak, to put it in the mildest terms. So Indonesia is the world's largest exporter of palm oil. I believe they account for about 33% of global palm oil exports.
Yes.
And palm oil itself accounts for almost half of global vegetable oil exports, and it really is a perfect storm. And the ones that are going to be earning it the most are the poorest countries in Africa also. So palm oil is used in almost everything from cooking jollof rice or whatever, to
even making things like soap.
Exactly, soap, ink, printer ink. There's so many things that palm oil goes into using. So now that we're seeing this ban come in, it's really going to push up prices of these things even more. Yeah.
So that soap you enjoy might become more expensive. And to think that Malaysia actually came here to pick the seeds, and you know that story and all that. And once again, is another potential that Nigeria is not tapping into.
Yes, we seem to be talking a lot about missed potential these days. Yes.
Okay, should we say missed or delayed?
Missed or delayed, both actually.
Is there any other thing happening in the commodity space?
I believe we covered most of it. I believe we cover most of it, yes.
All right, Longi, thank you so much for coming on the show and sharing your thoughts with us.
Thank you.
All right, so that was the commodities segment. But there was something there, like we mentioned. Kenya had to shelve its $1 billion Euro bond because of debt servicing. Well, we're going to put our attention there because once again, Nigeria's debt stock is there in our faces. And if Nigeria is using about 90% of its revenue to service debt, then we should really talk about that. That's what we'll do after the break. This is Business Morning on Channels Television.